Good evening, friends. This is Deval Thakkar. Uh, uh, and we have with us today the speaker, Deval Thakkar. This is an initiative by NSRCEL WSP participants for the benefit of NSRCEL WSP 4 cohort participants. We are decoding basically the nitty-gritties of finance, compliance, secretarial, and legal initially, and we will go further to digital marketing and many other topics. So today we have with us a finance wizard, Ms. Deval Thakkar, who will be throwing light on finance finance. Over to you, Deval.
Yes, thank you, Nehal. And before we start this session, let me tell you the importance of finance. Yeah, so for any organization, its performance is to be decided through this pyramid. If you are ticking each and every aspect of the pyramid, your success is for sure. So how we can use this pyramid? I will quickly explain. Left side of the pyramids is the external things, and the right side of the pyramid is internal things. So first we have to start from internal. In internal processes, if we reduce our cycle time and reduce the waste, it will lead to higher productivity, and a higher productivity will in turn earn a finance for you. And in terms of external market, you should have a quality as well as delivery at the right time, which will lead to a customer satisfaction, and a customer satisfaction will lead to a market success, and market success as well as financial success, both in turn will lead you to fulfilling your vision. So for any organization, if you want to achieve a vision, only market success or only financial success would not be sufficient. You have to make sure that both goes hand in hand. So that's the importance of the finance in any organization. In today's session, we are going to discuss the pricing strategies, cost, cash flow, working capital, and key financial indicators. So the first and foremost thing when you are starting anything new is deciding your price. Many of you have questioned that how should I quote my price? How should I decide the price of my product? So there are certain strategies based on which you can based on which you can have a brief idea of what pricing or how your pricing should move. So here are the pricing strategies I have discussed or tried to discuss. So first is value based pricing. That is, what is value based pricing? Is set your price according to what your customer think your product is worth. So the classic example of this strategy is Apple. iPhone, right? So the cost of production of iPhone is hardly around 12,000 to 14,000. Still you are ready to pay 80,000, 90,000 or lakhs of rupees to buy that product. So the first strategy you can use is you can set your price was based on the perception that your customer is having for your product. So when you are matured in the market enough, when you have earned a certain level of brand value, at that point of time, it is advisable to go for value based pricing. The second comes competitive pricing. That is, you don't have to use your brain. Just charge what your competitors are charging. The classic example we have seen across last 3-4 years is Vodafone and Idea, who have drastically reduced the prices after Jio has introduced. So it is best used useful for early business or the business in which there is a cutthroat competition. The third pricing strategy is price scheming. This pricing strategy is very useful for the startups who have to invest heavily in research and development. So the basic idea of this strategy is you charge high at the beginning to scheme the research and development cost out of the early adopters or the customer above the level, because they only can afford it and they will ready to pay you. And as your product, as the customer are ready to use your product, they are using your product, and then to scale it you reduce your price so that more public can afford it. And that is how you can step by step come into the market on a larger side. So the classic example for this is Tesla, the car, right? So this is useful for the business who are having high research and development cost. The another pricing strategy is cost plus pricing. It is very easy, it is widely used, and what you have to do, you have to just take an Excel sheet or take a pen and paper, write down the all the cost you are having, and add at least 15%. Why I am saying 15%? Because at the beginning of the startup or at the beginning of the activity, you might not be knowing certain costs which are unplanned. So to cover that unplanned, you at least add a 15% margin and you sell it. So this strategy is widely used in a retail market, grocery shops, clothing business, etc. The another pricing strategy is penetration market. So this is in current era, this is very frequently used strategy. Now penetration market is something is if you want to enter in the market at a very lower rate, and after customer built an habit of it or after customer digest your product, you increase your prices. So the classic example for this could be a freemium apps who are giving you the free access, and later on they are charging later on they are yeah so later on they are charging a premium amount. So this is again a highly scalable. It is only advisable when your product is highly scalable in the nature. Otherwise you will not be able to sustain for a longer time and you will not be able to earn a profit later on also. Then the economy pricing. So economy pricing concept goes price the product lower than the competitors and earn through volume. Now this is, take an example of Parle-G. As far as your memory goes, Parle-G is selling its packet in 10 rupees. It keeps on varying the weight according to its cost. Previously, Parle-G, you can say a Parle-G 10 rupee dairy milk. All these are the example of it. Like first 10 rupee dairy milk would be much thicker. Now it has reduced to a very thin layer of a chocolate. Same way Parle-G. So the funda of this says you don't raise your price, but you play with your weight, or by playing with your weight and keeping a price stagnant, you achieve a higher volume. So that volume will lead to profit to yourself, which the competitors might not be able to earn because they have raised the price and your product is available in the market at the same level. So they will choose your product and not the competitor's product. Then comes the dynamic prices. Dynamic prices is used for the industry who are into customization product. So in customization, right, the raw material or the cost will be as per the customer's expectation of the product. So in that case, you cannot have a fixed price. Your price will be dynamic as per the requirements of the customer. So dynamic pricing is useful when your product is customized or you can say a tailor-made product. So these are the strategies based on which you can decide a pricing for your product. Now, key analysis which has to be done prior to deciding pricing strategy. Before choosing any of the above strategies, what you have to do is you have to determine your value matrix. What is value matrix? That is for what you have to charge. Whether you want to earn per customer, whether you want to earn per unit purchased, whether you want to earn per click basis, first you have to decide that for what customer is going to pay you. Then you have to set an ideal customer profile. That is your target audience, their mindset, their economical standing in the economy of the country, and their average income. And then you have to do a little experiment with your pricing and a lot of research will help you to choose the correct pricing. This is as far as revenue is concerned. Now, what is cost? So cost is, there are two types of cost while you are running any business. Cost could be fixed cost or the variable cost. Fixed cost is something which is fixed, as the name suggests, it is fixed in the nature. That is, you do any activity or you don't do any activity, this cost is going to happen. Say for example, salaries, rent, insurance expense, etc. Fixed cost per unit will decrease as you raise your volume. Now, what does statement means? That we will take an example in the next slide and we will understand this line better. And fixed cost is also known as overheads. Now, variable cost. So variable cost is depends on the level of your level of production. This will only this will only incur when you are producing something. If you are not producing something, you don't have to spend on your variable cost. Variable cost is your raw material, your commission, your transportation, daily wages, wages of daily wages, etc. are the example of variable cost. And it is also known as the cost of producing a product. Now, here we have gone through a line that fixed cost per unit will decrease with the increase in production. Now, let us understand this line in much better way. Now, take an example of any of the business. Say, for example, if you are selling a bags, then you have a capacity of selling 1,000 bags in a month or in a year. Say, for example, if you are selling cupcakes or you are selling something related to food, assume that your capacity per annum or per year is 1,000 kg. So based on your unit of measurement, you can assume it. Now take an example that you are selling 1,000 units at a rate of 500. Then you are going to earn 5 lakhs. Say for example, let us assume your variable cost will be your variable cost. That is your cost of raw material, your commission, your transportation cost, your salary of daily wages is coming approx at 150 per unit. So your variable cost will be 1,50,000. So out of 5 lakh, 1,50,000 is the cost which is directly attributable to your production. Now, difference of this would be known as the contribution. That is contribution in profit of your product. After that, you have to reduce a fixed cost. Say for example, your fixed cost is 1 lakh rupees. So by the end of the year, you will be left with a profit of 2,50,000. Now, say for example, you are utilizing the full capacity. Say for example, here at 1,000 kg, you are working at a 50% capacity, and in the next year, you are utilizing your full capacity. Now, what will happen? Even though you are not increasing your price, that is, you still charging 500 from your customer, you are still incurring a cost of 150 rupees per piece or per kg. You are, and if you deduct a fixed cost, because fixed cost will not gonna change, it will remain same irrespective of the your capacity utilization, it will remain same. So even though you are not increasing your price, even though you are not saving anything into the cost, still at the end of the second year, your profit will become 6 lakhs. Now, this concept is known as the concept of economy of scale. That is, if you utilize your full capacity, you will be left with more profit, even you don't change your price, even you don't save on your cost. So this is the importance of utilizing the full capacity. Now this is the uh, revenue and cost concepts. Now let us go in a very important aspect, that is a cash flow. Now what is cash flow? In a simple terms, cash coming into your business and analysis of cost coming into your business and cost going out of your business. This analysis is known as a cash flow analysis. Say for example, if you are having a positive cash flow. Now what does positive cash flow means? Say for example, your business is having a cash inflow of 5 lakh rupees, and in total your business is demanding a cash outflow of 2 lakh rupees. So you are going to left with excess cash. This excess cash is known as a positive cash flow. Positive cash flow shows that the business is sound and is generating money. If the situation would be reversed, means your business is running into losses and you have to check where it is going wrong. Now, here cash also includes cash equivalents. Now, what is cash equivalents? Your short-term FDs, your short-term investment, which can be liquidated on your demand. That is also form part of your cash on hand only. Looking at to looking at a cash flow, you will be able to know what is happening in your business. Say for example, while analyzing your cash flow, you came across that you are paying a commission of 1 lakh rupees per month to particular agent, but that agent is not generating any revenue for you, and in future you still expect a zero revenue from that particular agent. So that will exactly tell you where you are expending redundant. By analyzing the cash flow, you will also able to understand which source is generating the most cash for you. So what you have to do is, you have to say for example, you are having um, four SKUs in your business. You take a pen and paper, you list your SKUs, and along and behind and below it, you just try to make a cash flow, that is how much is coming into my business out of this SKU and how much I have to expand it. So wherever, so by analyzing this, you will understand a particular product will be your superhero, which is generating the most cash for you. So that will give you an idea that be on which product you have to focus more. Now, this is after cash flow, there comes a very important con- concepts or very important measurement, which is known as a working capital. Working capital is current theoretically, it is current asset less current liabilities. In a simplest terms, amount receivable from your customer less amount to be paid to your creditors, including your employees, will be known as the working capital. Yes, this is very technical, and we will understand. I have taken an example in the next slide, and we will understand in a more simpler terms. But this is just some technical words which you should know while talking to someone else, talking to third party, talking to investors. These are the words that they will use, and these are the meaning in which you have to understand it. Consistent negative working capital will ultimately result in cash burn. As the name suggests, working capital is something which keeps your business working. How? Let us see. So this is a working capital cycle in any business. You are having a cash. Using cash, you will purchase a raw material. Using a raw material, you will produce a finished goods. By selling your finished goods, you will earn receivables, or you will earn from your customer, which will again generate a cash for you, and this cycle keeps on going. So if this cycle for your business is smooth, that means at a particular after a particular level or after a particular year, you will achieve a profit, or your business would be more sustainable. Now take an example that how this cycle could break. This is case A. Let's understand case A. A have is purchasing raw material. Say A for his business, for his or her business have to purchase a raw material of 1 lakh with it with initial investment for his business, and it A purchased it at the terms that I will pay you in 30 days. Say A went to a vendor for purchasing of a raw material. Say for example, he need a raw material XYZ. So to purchase XYZ, Z, A has decided to invest 1 lakh rupees on his own, and he agrees to the vendor that I will pay you back in 30 days. The deal is fixed, and A has purchased the raw material. Now, through this raw material, A has produced something, and A has sold this product to Mr. X at a 1.50 lakh. So on that day, A was very happy that I am going to earn a profit of 50,000 out of this deal. But A has decided that I will. A has given a credit period of 90 days to X. Now understand what is happening is on the 30th day, your vendor will come to you, knock your door, says, give me 1 lakh. But on the other hand, you do not have cash because you have agreed while selling the product to Mr. X that I will receive a money in 90 days. So for 60 days, your business will have no cash in it. So that gap is known as a working capital gap. Now, this is some case A is something. If you keeps on, this is just a one example. Say if you say in this terms you have executed 50 contracts, what will happen? Ultimately, you will end up doing a good amount of cash burn in your business. Now go for case B. Say case B have done the same thing, but what B have done? B have said to his vendor that I will pay you 1 lakh in 60 days. He has sold the product to Mr. Y at a 1.50 and with a term that I need my money in 30 days. So here Mr. B will be having a cash for a period of 30 days, which he could able to use in his business, and he could invest wisely, or he can earn something out of it. So you have to make sure that your inflow would be at an early stage and your outflow has to be at a later stage, So this will make your business and your working capital healthy. Now, there comes times where scenario A would happen in the beginning of the business. So there are facilities other than the investment from VCs or through equity participation. There are various cheap options available in the market to specifically manage your working capital. You can avail a cash credit facility from bank. This facility bank give you based on your projection and your profitability in the future. They will allow you a cash credit with a, that is, say, for what is cash credit, say you have 1 lakh rupees in your account, but a bank will allow you to withdraw. Say for example, you are having a bank has granted you a cash credit facility of 2 lakhs. So even though you are having a balance of 1 lakh in your bank will allow you to withdraw 3 lakhs, and on a differential 2 lakh, bank will be charging the interest. What is the benefit of it? If you are withdrawing in excess of 1 lakh, then only you have to incur the interest cost, otherwise not. Then you can have an overdraft facility from the bank. Then banks are giving working capital loans, and they are also giving overdraft against your FD. Say you are having 1 lakh rupees, you put it in a FD in a bank. Say for example, that FD is earning a 4% interest per annum. Now, if you need money, you tell the bank that I want overdraft facility in this FD. Then bank will give you 90,000 rupees. That is your FD ka 90%. Bank will give you 90,000 rupees and the interest of it would be only 1%. That is in only 1% you will be have your FD will be intact, and also you will be available, and the funds will be available with you at a very cheaper rate. Now, this is few financial indicators, that is few financial measurement that will tell the health of your business. So while analyzing any business, any investor will go through these indicators. Right now I'm not going into any calculation part, because again its calculation part is very technical for anyone to understand who is from non-finance background. So I have just trying to give you the meaning of the word. So whenever you are talking to someone and whenever they ask you this, you should not feel you should not feel an alien language, right? So the first indicator is your return on investment. The return on investment is something which tell you that how much you have earned for per rupee invested in your business. Say for example, you have invested 1 rupee in your business and your return on investment calculation shows 5%. That means by investing rupee 1, you are earning 5% out of it. So this is what return on investment will tell you. The another important concept is financial year and assessment year. Now many people confuse between the financial year and the assessment year. Now why knowing this two is required? Because our whole revenue system, revenue compliances will run based on these two concepts. Now first understand the financial year. Financial year is a year starting from the first day of April and ending on the 31st day of March next year. Say for example, right now we are into the August 22. So the financial year is 1st April 22, 1st April 2022 to 31st March 2023. So while running your business, you have to write your books of accounts for the financial year. And every and all our government agencies will require information from your business from the financial year. And this financial year, now this is how you have to maintain your books of accounts and your records. There then comes a concept of assessment year. Assessment year is concept is only restricted to the direct taxation, or you can say the income tax. Assessment year is, say for example, right now we are into the financial year 22 23. Now in government comes, income tax department comes to you and tell you pay the tax. On which amount you will pay the tax, because the year has not yet ended. So for the year 22 23, you will pay the tax in the year 23 24. So that year 20, so the year has got ended, and you can assess your income, and your income you can pay your taxes. So government will ask you tax on for the financial year 22 23 in the year 23 24. That is, they will, on the 1st April, they will knock your door and they will tell you that now what is your income, because 31st March 23 has ended. Now you know the income, now you pay the tax. So for 22 23, the assessment year would be 23 24. That is immediately next financial year would be the assessment year of preceding financial year. I know this is very technical to understand, and you just try to absorb, then whatever doubt you might be having, we will be solving it. Then comes the concept of depreciation. Depreciation is something that is wear and tear of your assets. Let's say for example, you are into a consultancy business, you are using your laptop, but while charging to customer, you forget that your laptop has a useful life, that after a few years your laptop will have of no use. So the cost of laptop, you have to make sure that you allocate to your product, and that wear and tear of your asset which you are considering as a cost, that cost is known as a depreciation. Then comes a concept of EBITDA. This word most of us have heard. And what EBITDA means? It is earning before charging of any interest, taxes, and depreciation. EBITDA is very useful while your business is getting valuated. Now, what is interest? Say, for example, to run a business, you have taken a loan of 50 lakh rupees and you are paying interest at the rate of 10%. So you are paying 5 lakh rupees of interest per annum. So to value your business, you have to so to know the profitability of your company while valuing your company, you have to ignore the cost of interest, cost of taxes, and cost of depreciation, because these are the taxes and depreciation are in depreciation is anyway a notional cost. Taxes, you have no control over taxes because that will run according to government's wish. And interest is something which in future will lead to a zero amount, because when your loan will be repaid, the interest would not come. So that is why while valuating your business, you have to ignore these three expenses. Then comes the profit before tax, that is how much you have earned before paying your taxes. That is the amount on which you have to pay taxes to the government. On this amount, if you reduce the tax paid, you will come to a profit which will left with you after paying taxes, which is known as PAT, or a profit after tax. Then comes a very important measurement, that is a customer acquisition cost. That is the amount spent on advertisement to acquire a new customer. A cost of example could be your advertisement, your sales and promotion, your free of sale, your sample sale, etc. So why this is important? Because higher the customer acquisition cost, you will able to understand that people are not talking much about you because no organic marketing is happening. Low customer acquisition cost will give you an idea that other than me, there are other few people who are talking about my product, who are talking about my business, who are talking about me, and I have to spend less to get a new customer. So to have a healthy business, you have to make sure that your customer acquisition cost will reduce day by day. Then a customer lifetime value. Now, what customer lifetime value means? That is, say for example, today I am launching an app and I have a charge of, say, I am charging rupees 100 from you. So, for how many years or for how many years I am going to receive rupees 100 from you? That will be known as a customer lifetime value. That is a total revenue you expect from a particular customer is known as a customer lifetime value. So why this is important? Because it is important to figure out that your customer acquisition cost should not exceed your customer lifetime value. Because what a customer is going to pay you over a lifetime is lower than what you are spending to get the customer, then definitely your business is going to occur a loss in the future. Then it comes a concept of debt equity ratio. That is, how much amount is invested by an outsider in your business. Debt is nothing but a loan. That how much loan your business have taken. Then it comes a unit economics that I have already explained about. That is your customer lifetime value. If you deduct the customer acquisition cost, then the amount which is left, say for example, a customer is having a lifetime value of 2 lakh, and to have the lifetime value of 2 lakh, you are spending 50,000. So the 1,50,000 would be your unit economics. This amount, that unit economics, will give you an idea that how reasonable your customer acquisition cost is. Say for say I am expending rupees 1 lakh to earn rupees 9, and my customer lifetime value is say 10,000. So there is no reasonableness in your spending amount. So unit economics is very important when you are doing any when you are planning to do any advertisement cost. So this is it. I think after this it won't be possible for anyone to digest anything in finance. So now comes question answer session. So now I am open to answer your queries.
Please feel free to ask questions to Deval.
Either I have explained very nicely that you have understood everything,
Amazing session.
either you haven't understood anything, so you don't have any questions.
I think a lot of processing is happening.
Yes.
Deval.
For
Hi,
unit
Deval.
cost and everything.
Yes.
Hi, Deval, Bhakti here.
Yes, Bhakti.
So I wanted to ask you something. So
Yes.
there is, when you said that, the simplest way to create your cost is basically your total input cost plus say 15%, right?
Yes.
But then there are a lot of variable costs that come into play, especially honestly when it's startups. We are very hesitant when it comes to the number of you know what do you say, units I should produce. We go slow, so our initial cost is always how much to stock. So if my cost is say 50 rupees making cost with packaging and everything, then
Okay.
I need to add how much marketing cost and all those. How do I plan that?
See, that is why I have given a figure of 15%, because when you are doing any business in India, the benchmark return, that benchmark profit that everyone will averagely earn is 8%.
Right.
Right? So
Right.
any business in India is not earning more than 8%. I am excluding Reliance, I am excluding Adani's, I am excluding Tata. Right? So
Okay.
any normal or any economical business in India would on an average is earning between 8% to 10%. So as a startup, you don't know any of you don't know your few cost, which will occur spontaneously. So to
But I'll
cover
tell
that,
you something. So what is the challenge that we're facing, which is why I'm still struggling with my cost structure, is so even if my making cost is X, I want to sell
yes,
at Y. But when I'm approaching, since I'm a small company, when I'm approaching distributors or certain, especially, okay, I'm in the children's toys education segment, they're
okay,
expecting a margin of 40%,
okay,
30 to 40%.
okay.
Then my product cost is only going extremely high. I mean, my selling cost. So how do you balance that?
So for balancing it, you have to make sure that first you have to analyze your data which shows that you know how much. Just a second. Yes, I'm so sorry. It was an
No,
important
that's
call to attend. Yeah. So, Bhakti, what I'm saying was that you have to identify the exact demand of your product.
okay.
Say, for example, you are approaching a school,
Hmm.
or I am taking an example of toy,
Hmm.
right? So, say, first you have to go to the market. You have
Hmm.
to try to get an average idea of,
Hmm.
say, if I'll produce 100 units,
Hmm.
then 100 units I would be able to sell in 2-3 months.
Right.
That is what you came across. So
Right.
what is advisable, that for the total 100 product, you acquire your raw material today.
Hmm. Hmm.
Why? Because then it will give you a more negotiation power in terms of quantitative discount. Now what you are doing, an order is coming,
Huh.
then you are going to purchase your raw material. At that point of time, because you have to meet an commitment, you do not have
Hmm.
negotiation power.
Hmm.
So that is how you have to reduce your cost, by planning your production. You have to
Right.
produce for 2-3 months in advance. So that
Right.
will give you a more negotiation power in terms of raw material acquisition, in terms of transportation also. In For
Hmm.
courier agencies or for someone, you can
Hmm.
easily negotiate that for 3 months you are going to earn from me. So
Hmm.
now you say a reasonable price. So
Hmm.
that is how
Hmm.
you have to build a strong negotiation power, and that will
Hmm.
reduce your cost.
Hmm.
And by reducing a cost, you will be able to meet a particular margin,
Hmm.
because there is two way to increase a margin. Either you charge more from the customer,
Right.
that is not advisable, because customer is not going to pay you more,
Right.
right? So the
Right.
second option is you reduce your cost. That is in our hands, and by
Huh.
planning it little strategically, while planning it based on a little database. Say for example, in the month of May or June, schools are starting, right?
Right.
So the for toys, which is uh, I say a compass box, in nature of compass box, or pouches, the
Right.
demand of it will increase.
Right.
So in that period, say if you are going today to purchase a raw material of that, it will cost you much because demand has already arisen. So you have to go in the month of January in the market where where that product is not having demand. At that point of time, raw material is available in the market at a cheaper cost.
Okay.
And at that point of time, you have to acquire the raw material, you have to produce it, and when the demand arises, you have to sell it, because at that point of time you can earn more profit because demand is there. So this is how you have to plan your procurement as well as your selling
Okay.
to control
Makes
your
sense.
cost. Yes.
Right. Okay. Thank you. Thank you so much.
Yes.
I think I'll have more questions because this is a very tricky this thing. So
Right,
and
right.
I'm like right at the in the middle of production and getting it out. So hopefully I can email you or reach out to you.
Yeah, sure. I will drop you an Telegram message with my contact number. You can get
Okay.
in touch with me anytime.
Okay. Thank you so much.
Yes, yes.
Deval, you're also please put your email ID and
Oh,
first slide, of course, you
yes.
have, but you're just put your
Yes.
mobile number so everybody
Yes,
can
so
be
I
in
am
touch with you.
in a chat box. I am putting my mobile number, so you can get in touch with me on that number. Anybody, anything else?
Any other questions?
I think there's
I
too
think-
much of thinking everybody has to do to go
Yeah,
back to the drawing.
I think they would like to have a one-on-one thing because everybody will have a different
Right,
case study and
right.
something. So sure, you can offer a
So yes,
one-on-one to them. Yeah.
what I am suggesting, I have my number is now available with everyone in this session. So you process what you have heard today. After processing it, I know it is little difficult to process, which is not of our zone. So yes, you take time for processing today's session. Immediately after the session, I am sharing this PPT in the group so that you can have a literature in front of you. You can process it, and then you come to me for any of the question or any of your doubts, and I'll be happy to help.
Perfect. Fantastic. May I request Shilpi to offer a vote of thanks to Deval?
Yeah, thanks, Nehal, and thanks, Deval. It was, I mean, even though I was not able to attend it completely, my call got stretched. I intentionally kept it to 2 to 3 and it ended at 4:30. So, but whatever you have mentioned and whatever I heard is, fantastic. Even for me, the example you mentioned about the cost of acquisition customer and the I mean the logic behind that, it is, if it is going higher, that means nobody is noticing to you. Brilliantly mentioned. I really like the thought and logic you gave. And apart from that, the way of negotiation you just mentioned for the bhakti, that was also very much, I would say. Somebody has a question. Okay, acha, okay, somebody has said, I'll get back to you. So that the way you explained about the process of a strong negotiation, that was again a very, I would say, very interesting way to explain that, because nowadays negotiation is really important, and negotiation is an art, and everyone needs to understand it and needs to learn it basically. So
That is where
yeah,
you win half of your game.
yes. But sometimes highlighting the points which are necessary for the negotiation, that is the biggest task, because we all do negotiation in our day-to-day life, but we forget to apply them in a professional life. So the whole session, I mean, the session was really interesting. And I mean, anyone who can have questions even related to the invoices, not related to these high terminology related to finance, even the simple questions related to the maybe invoices, maybe the income tax, your ITRs, if in
Right.
case you missed to file it for this year. your company's ITR, you can definitely, I guess, they will can be your go-to person for all future related requirements. And they will thank you so much for taking out time. I know you were busy in some of the handovers, etc., but still you
Yes.
took out time and
No,
spare
that is
1 hour.
the purposefully, because Saturday was my last day at job. So
Okay,
that is why
okay.
I have kept it today, so that I am free at my home.
Okay, okay, then it's fine because I know last week you were a bit occupied. I know about it.
Yes, yes.
Yeah, but if even is still, I mean, after last working day, we really want to get some sense of rest. But you prepared the PPT and spare time 1 hour especially. So we are really thankful for you. We are really grateful to you. And my sincere thank you for Nehal as well, because she is the one who is actually working hard to making happening these sessions. This is a great thank you, Nehal, for you. And apart from that, I would like to thank you other participants as well who actually took our time and listen the Deval and make these efforts successful.
Thank you. Thank you very much to all. Thank you. Okay. So we end the session here. And as Deval has said, she will be sharing the PPT also, and the recording will be there by tomorrow. Yeah. The recording link will be there also available. Thank you.
Okay,
Okay,
thank
thank you
you
everyone.
everyone.